G'day everyone, Zoran here from Hot Property Buyers Agency and Your Empire here in Brisbane. Today I'm joined by Chris Gray from Your Empire in Sydney and Lauren Staley from Infolio in Melbourne and Your Empire in Melbourne. How is everyone?
Yeah, good to see you. Obviously the market's starting to take a bit of a run, which is good news for some.
Yeah, for sure. We're going to delve straight into that, I think, Chris. We have some statistics coming out of May. So obviously we're recording this in June and we can now reflect on the results from May, which show positive movement around Australia. I personally think this is being really driven by an undersupply. What are you guys seeing in your market that's driving this upward trend?
Look, in Melbourne, I was just talking to someone about this only an hour or so ago. Anything that's happened with interest rate rises has been somewhat negated by the lack of stock. We just don't have anything available. I'd suggest that as a buyer's advocate, we're doing triple the work for the same results. It's really, really tough, and we're a professional outfit. So we're buying properties, but we're doing a hell of a lot more work than what we typically would to get the results. So they're there, but it's tough. It's really tough.
Yeah, Zoran, what about yourself, Chris?
And look, in Sydney, I mean, I've been buying since 99 here, and I said there's never been any stock. Sure, when we go through COVID and GFC, there's a bit more stock than normal, but a lot of the time it's the dregs anyway. So there's never any decent A-quality stock pretty much at any price level. And again, we've said it time and time again, month in, month out, everyone tries to time the market. Everyone tries to get too clever. Everyone tries to say, oh, interest rates are going to go up more, the market's going to crash, we're waiting for this mortgage cliff. All of these various excuses, as we see it in the market. I mean, Sydney's up 4.5% for the quarter, which is $45,000 on $1 million property. We're typically buying at $1.5–2 million. So that's kind of $70,000 or $80,000 just in the last 3 months. So for those people that are wondering whether the 2% buyer's agent's fee is worth it or whether they can bottom the market, they've missed it. It's too late. You need to get on the wagon.
I couldn't agree more. The market, the bottom that everyone was waiting for is definitely past us, hasn't it, Chris?
Yeah, they're not even talking about the mortgage cliff anymore, whereas that was the subject of conversation for a while. And as we know, there's something new in the media every day, and they just move on to the next thing.
No, exactly. I think we all picked it earlier in the year for regular viewers of this monthly update of when that market started to turn. And that really was an opportunity where you may have been at the bottom of that market cycle. But I don't think that the door is closed for astute buyers to secure good deals. I don't think it's too late for them. It hasn't run away to the point where you should be, in a fear of missing out. But I do think people who were waiting for some sort of sign, this is the sign to get your financial affairs in order, get your pre-approval and be active out there in the marketplace, because hopefully soon we will see this undersupply of listings start to change, and we might see some vendors hitting the market trying to capitalize on an improving market sentiment. Chris, anything else you want to add? What's going on in Sydney?
Well, we're actually I know a lot of people won't watch this for a few days till we've edited it, but literally the RBA's just come out. So we're recording this on Tuesday at about 3:00. The RBA's increased the interest rates by another 0.25%, which obviously is a pain up the backside for anyone with a mortgage. And believe me, I've got plenty of mortgages, so it's certainly going to hit me hard. But again, sure, things are up 0.25%, but if Sydney's up, say, 1.8% in the month, just in terms of capital growth, as long as you can find a way to cash flow it, you're still ahead of the game. And so that's why you can't get into all this detail. It's in time the markets or the interest rates are going to go down again. So if you're trying to analyze every single little decision, should I buy now or later, depending on what the RBA says, no, you should still be looking 5, 10, 20 years.
Yeah, I think another thing also to probably point out with that is that the reality is they're talking that, I mean, while inflation's where it's at, we're always going to have another interest rate rise. I think people are quite pragmatic about the fact that we're probably at the top of it or pretty close to it. So people are now making more informed decisions about buying property, and they don't have the fear that they did when we were, say, 5 interest rate rises into the rise of 11 or 12. But what is really important in this market, Chris and Zoran, as you just said, is we've had 3 months in a row, 4 months in a row of increased values in property, right? And that's talking about suburbs or states or as a whole. And there are some areas that have gone up more than that, in particular the blue chip suburbs where we do a lot of our buying. So, if we look at the stocks deficit and the property prices going up, the fact that a buyer's agent can actually get the purchase done faster is going to yield them far better results, because they're going to buy in today's market rather than in 3 or 4 months' time when the interest rates have stalled and the property prices are now going up again.
Yeah, I totally agree. I'm seeing clients at the moment who unfortunately have their head in the sand when it comes to the actual market growth and what is occurring. They still think we're in a stagnant or falling market. It's just not the case. Guys, I want to quickly pivot to another topic that my office recently has been discussing, which is around insurance premiums. So we're, just over 12 months on from the natural disasters of the floods here in Queensland, and we've started to see insurance premiums on the rise, up to 50% for some increases. Are you guys seeing the cost of landlords and property ownership affecting your investors at the moment, or are you seeing any of those sort of things in your marketplaces as well?
I haven't really seen it too much. I know in COVID, then a lot of the insurers went out of the market and they didn't want to cover residential property. So I think before we were paying maybe $300 or $400 for effectively a landlord's protection insurance for a unit, kind of $1 to $2 million. Then I think in COVID, it went up to about $600 or $700. Now I think it's maybe down 4 or 5. So I'm not sure if it's up recently because of the floods and stuff, but I know it's definitely down since COVID. But again, with all of these things, I think it's dollars and cents. Like we're talking so on $1 million property, your mortgage is 5 or 6%, which is $50,000 or $60,000. Your land tax is $5,000. Your other bits and pieces are 6 or 7. Again, it doesn't really come into it, but it's amazing the amount of people that do look at the land tax or the insurance. They're counting the dollars and cents, but then they suddenly miss that the market's just moved a few percent and it's gone tens of thousands of dollars.
I think the key, though, at the moment for most people is cash flow, though, right? The question, all of this stuff that we're talking about makes sense. And on paper, it really does. Obviously, buy good property, it'll go up in value. But it's the holding cost at the moment that I think that most people have the fear about. I think from our perspective with landlords, we're just starting to see, we manage a significant portfolio here, and we're just starting to see people making some decisions to offload their assets because they know now that where the interest rates have headed, they can't hold it. But that's not because they don't want to. It's because they're balancing a number of different assets and they've got to pick which ones they keep. A lot of our clients have got kids in private schools, and whether it's a private school or not, their children are at that age where they're hugely expensive. So managing that's really, really important, but also remembering that it can be short term because rents are going up. And rents are going up quite significantly and vacancy rates are low. So we're probably in the best investor market we've seen for some time, but everyone's just looking at this one part, which is interest rates. And you really need to pull it all apart to get a whole picture of what's going on.
But look, I agree, it's definitely cash flow. And if you haven't got the cash flow, you can't hold on to things. But again, everyone does regret selling. So if they look back in 5 or 10 years, would you have begged, borrowed or stolen effectively to do whatever it takes to hold on to that property? In hindsight, we always would. But at the time, you feel the pain and then you feel about offloading it.
Yeah. For sure. I think in a market like this, those who maybe sacrifice 1 or 2 luxuries or just have that initiative to stay in the market 10 years from now will feel that significant difference between them and their peers. Guys, any closing remarks from the June update for 2023?
Look, I think the main thing that we say month in, month out, year after year, and ideally because we keep saying it, take heed, is you've just got to get in. That's the main thing. You've just got to go and take some action. Sitting on the sidelines, sitting on the wall is not going to do anything for you. Sure, it's tough, but it's always tough. If you wait now, wait for interest rates to drop, then prices will be higher. So there's always going to be another problem around the corner. There's never the perfect scenario of kind of high capital growth, high rental yields, easy to borrow money from the bank, easy to buy property, and kind of low interest rates. You're never going to get those 5 things at any one point in time. So you just got to make the most of it.
It'd be bloody good, though, if we did. Let's be honest.
Yeah.
I couldn't agree with you more, Chris. It really is about just getting in. And it's funny because the conversations, for me, it's felt like this year's been, we're sitting in June now, 6 months of quite negative conversations around property, but the reality still remains. A lot of the people, we've met with many people who have sort of said, look, I don't want to buy yet, I want to wait. And now what's happened to them is that the rates have gone higher, their borrowing capacity has gone low, and the property prices have increased. So that's the last situation we want people to be in. So, buy what you can afford and get good advice along the way, whether it's from us or someone else in the industry. Just make sure you're tapping into it, because the market, if we look at it historically, has always continued to grow, and we've had a few flat spells. But I mean, I've been doing this for 22 years now too, and there's very little downturn in these good markets, in these good locations, I should say.
For sure. My old saying, all you get by sitting on a fence is a sore butt. So get out there and do something. Thank you very much, everyone. And thanks for tuning in to this month's Your Empire market update across Brisbane, Sydney and Melbourne. If you want any more information, reach out to your relevant market you're looking to buy in, and we would love to be of assistance. Thank you very much.